Hello, and welcome to the Block Explorer. I'm Colin Brightfield.
Hey folks, I'm Cash Upton.
The Block Explorer is here to educate and inspire you about the world of crypto and NFTs.
We'll do deep dives into critical concepts for understanding what's happening and discuss the current events shaping the space.
We're making this podcast for the curious, the free thinkers, and the change makers that propel us forwards.
As we embark on our adventures, remember that none of this is financial advice and crypto can be risky.
This is our first Tactical Tuesday episode where we'll be explaining the basics of onboarding into the crypto ecosystem. And we'll talk a lot about how to bridge from fiat world, the legacy finance world, into DeFi, decentralized finance. And we'll talk about why this matters and why you should care about it.
Yeah, I think the best place to start is with what you just asked. Why does it matter? What's the whole point of being a little bit more decentralized than centralized? And there's a pretty big current event that just happened. Why don't you tell us about that?
Yeah, I think we all kind of know what we're going to talk about. Facebook went down on Monday for approximately 5 hours. Not just Facebook, but their whole suite of apps. So WhatsApp, Instagram, etc. And yeah, we all saw what can happen when you have a centralized company that's responsible for something that billions of people rely on.
And specifically WhatsApp going down. I heard a lot of feedback on NPR about small businesses, not just in the United States, but all over the world. They were interviewing a Ghanaian lady whose whole business pretty much got shut down because she couldn't communicate on WhatsApp for a few hours.
Yeah, it's incredible that it was down for how long it was, and that it was essentially what they said was an internal error that they had with their border gateway protocol, which is kind of like the GPS system or the postal service that maps coordinates onto the internet and tells servers where to look for certain web pages or data. And this is something that was an update that they kind of sent out, and that's kind of what happened and why it went down. But this is something that is unique to centralized companies that I don't think people realize that blockchain technology is an instance where it's a little more resistant to these type of failures.
Right. And that's because a lot of the processing power of the isn't all in one area. It's not all on just one server.
Yeah. So if you have a centralized company, right, you have vectors of risk, like there's actual, one place, there's their servers can go down, that you have corruption in the company that can happen. You have human error. You have a lot of different variables that are in play that can fail along the entire system. And so it's just way more risk prone, essentially.
So what would this have looked like if it was a decentralized social organization?
You might have had maybe certain nodes of the network might have gone down, right?
But not the whole network itself.
Yeah, you probably could have still been able to make phone calls or still post to Instagram or still check your feed or whatever. But maybe in certain regions, it might have been spotty for a while until it recovered. But what happens is often if a node goes down, then a lot of the times the data will start looking for other nodes that are nearby, to go to send the data there. So it's like,
right. So it might be a slower process, but it's still going to go through.
In theory, yeah. Yeah. I mean, that's kind of why we have decentralization, right? That's the whole structure of these blockchains, is that there's no one point of failure. You have it's set up in an array where you have over hundreds of servers, hundreds of computers, whatever blockchain it is, right? It's all over the world. So something can go down in one area, but it's not going to take the whole thing down. Whereas a centralized company, if one thing goes wrong in one spot, since it's all centralized, it's all kind of connected, it could all just go down at once.
And that's obviously the functionality of this social network. There's broader implications for decentralizing it for freedom of speech, for censorship.
Yeah, I mean, this is why DeFi. Why does DeFi matter? Decentralized finance matter. Why does decentralization even matter? It's because it protects your freedom. It protects your rights. And we're kind of living in this state now where governments are continuing to erode our rights. I don't see a lot of governments giving us more rights. I think pretty much it goes the opposite direction. We're just seeing rights just be taken away left and right. And you have to actually work hard to find ways to protect your rights and preserve your rights in this world. Like just like, and we look at how challenging it is sometimes even just to go from the fiat world to crypto. They don't make it easy. And there's like instances where banks can put a 14-day hold when you want to go from buying crypto with your bank account or into Coinbase, or 7 days or whatever. I mean, the banks don't want you to go into DeFi because then they can't get you. They can't hold on to your money. They can't control you. And this is what we see with China, banning crypto because it's a power move, because they don't like it, because they can't use it for control.
Right. And when you do want to move your money around, you have full control of your money when it's in DeFi, whereas the traditional banking system only ever has a few to 10% of your money on hand.
Yeah. They're actually, I think it's like 10%. So yeah, if there's a run on the banks and we all wanted to withdraw our money from the banks together, the government, they wouldn't let us. Essentially, they'd have to stop, or the government would have to turn on the money printers and start printing out trillions of dollars so that we could afford to pay everyone back. And we'd have hyperinflation, and then the whole system would come tumbling down. So the whole system is built on this leverage that banks have in the system, right? And this centralized control that they have. It's all built on that. And because of that, that has this one, it's easy to control. You have all these power vectors, but also it has all these risks, right? And we saw that with the 2008 financial crisis. And then we're seeing this now with the Evergrande crisis in China, with the real estate giant that's all over levered, and they have over $300 billion in debt or something like that, and they only have 1.6 million unbuilt, unfinished houses, but they only have $100 million on their balance sheet. So this is the kind of things that can happen when you have centralized companies with a lot of power,
and leveraging debt
and leveraging really hard. So blockchains are a way to protect that, because you can't get that bad. It can't get that bad because of the checks and balances built within the blockchain system. I mean, it's all transparent. It's all there. So, Evergrande wrote an email to like the CCP, the Communist Party of China, and said like, yeah, I think we might be going towards a default, and can you help? But
right.
it's
and
like,
yeah, we don't want you to default.
It's like the Chinese government, people have been talking about, what's going on for like on Twitter, I think for like over a year, but it finally all kind of came to a head last week. But we're seeing, it's a story that goes on and on in history, is that you have these situations where there's a lot of money floating around. It's a long bull market, and people start to do strange things and take on a lot of risk when growth is really, really high, right? And so they can take out big loans because their growth rate's so high that they can keep servicing that debt with all the growth. But once that growth slows down, they can't service that debt anymore, and then the whole thing gets unwinded. And that's what happened time and time again throughout history. If you look at different companies going under, different economies getting destroyed because of over leverage.
And the beauty of decentralized finance is that there's smart contracts, there's mechanisms that are built into the code where they don't let you over leverage to the point that you'd be at such risk, or they tell you blatantly with a big red flag and a health score of whatever really bad to show you, hey, this is a really over leveraged debt, you probably should reconsider this.
Yeah, they don't. There's some checks and balances to prevent you from doing that. In crypto, like on Aave, which is a DeFi automated market maker, so like a money robot, and Aave lets you borrow and deposit assets. So you can put your Bitcoin, you can put your Ethereum in Aave, and then you can borrow against it. But they only let you do take a loan out up to 75%, I think, or maybe 80% of your total principal. So you have to be over collateralized, and that protects you from, it protects the entire system from this kind of over leverage that can then unwind the system. Right. So there's, and you see that this time and time again is that crypto is really good at building in these functions that make it really robust, right? So, we do see like sometimes, crypto's has a reputation of being very volatile, right? And we see some of these big drawdowns come, where the market can move 10%, 20%, 40% up or down. And DeFi doesn't break though, right? It doesn't break the market. Everything still functions. All the apps still work. Gas fees will be high because a lot of people will be making trades, but that's it. It still works. And there's there's an elegant beauty in the fact that it can bend, but it doesn't break.
And if we were to dive in a little deeper, because let's go back to that whole banks only have 10% of your actual wealth in their stores. So that's meaning 90% of it they're investing, they are making returns on. And so essentially what decentralized finance is allowing the common person to do is to use their money to actually be earning returns.
Yeah, because if you put your money in one of these normal what they call quote unquote high yield savings accounts, they give you what, less than 1%, 0.01%, or maybe if you're lucky, you can find like 0.08%.
Right.
And like that's considered high yield. And like you're supposed to be excited about that. Meanwhile, they're taking your money on the back end and going and doing all these quote unquote accredited investor things that only investment banks are allowed to do, with derivatives trading and over leverage and all this other stuff, and making much more money off of your money. Meanwhile, they just give you that measly 0.01%. And then when you try to go to spend your money, they make it really hard. You have to pay fees. When you try to you go and want to deposit your money into a crypto bank, they more fees. They hit you with a 14-day clearing. Like they're feeling the pain. They do not want you to leave the system. They want to keep you locked in the financial prison of legacy finance. Because if you go to DeFi, right, it's like jailbreaking. It's like you broke out of prison and you don't have to go back, right? This is like the journey to go into a new frontier of crypto, where you can literally just go one way. You can go from your normal bank fiat into crypto, and then you're out. And then you can go do all these amazing things like you're saying that normally banks can do. And you can make that yield with your own money, and you take custody of your assets, right? So we've talked about this before on the podcast, but banks and brokerage firms traditionally, they hold the asset for you and they put your name next to it.
Something really cool that I just did that's been years in the making is I finally closed out my Bank of America account.
Wow.
Yeah. No more teeth in me.
How did you do that? How did they even let you do that? Did they bring out the police and like threaten you and stuff?
Right. It was a lot of signing, and I still have a local credit union to get my paycheck into, but it's going to be coming along pretty soon where you can get direct deposit into Coinbase, I believe.
Well, Coinbase, yeah, you can. It's still a centralized exchange, right? There's still a centralized company, but soon, hopefully not that far away, you can get deposits straight into your crypto wallet. And we already know that there are credit and debit cards that are linked to crypto wallets already. So you can get one of these cards, and so you can spend your money straight from your crypto wallet. You can spend your Bitcoin or your ETH or whatever at the grocery store, and as it swipes, it automatically converts it into fiat and completes the transaction for you. So this world is coming. So the question a lot of people ask is like, okay, if I buy some crypto with my fiat, I go from the fiat world, legacy finance world, to crypto, can I go back? The answer is yes. It's pretty easy to go back. They don't make it hard to go into crypto. They make you jump through some hoops. Depending on where you live, you might have to do X, Y, and Z and show your license and all, some of these weird things that, the government wants to track all these things. And then if you want to go back, it's very easy, but why go back? Why do you want to go back to banks? Unless you really need to pay some bills or something that doesn't take a credit card, you need to write a check. Who writes checks anymore? But I think what people don't really see is that the world is moving towards a more DeFi world, more crypto world, and the world is going to get more crypto friendly, that you're not going to need to go back.
Yeah, my brother just sent me a email notification that a artisanal Navajo rug dealer outside of Sedona, Arizona, is finally taking Bitcoin. So it's coming into these like niche markets where you're like, oh, they're taking it.
Yeah, well, what also is people are going to start preferring it, because people are crypto's taking over the world and it's becoming more and more ubiquitous. I mean, we already have El Salvador. It's recognized payment in how it's the official money of El Salvador. So, I mean, there's going to come a time where it's going to switch, where you might even get discounts if you pay in crypto because you'll be saving the merchant's fees, right? You're not going to have to pay the Visa charge or the credit card processing charge and the whatever weird fees they might slide in there. So it's gonna be a win-win situation.
So
And
good.
yeah, it's gonna be great. Like right now, it's like right now because the world is still kind of we're in this transition period where slowly but surely crypto is becoming more and more adopted, and more people are like taking it or accepting it, etc. But it's going to get to the point where the world's going to catch up, and if you already have your money in DeFi, you'll be sitting pretty because you'll just go and the world it'll be just so seamless. Right now, there's some friction, right? To like, yeah, this the guy in Sedona takes for nice rugs takes it, but you can't always just pay everyone in it yet. But that's what I'm saying is eventually you will be able to. And it's not that far away.
I want to go back real quick to a point you made about custodial ownership and whatnot. And so, traditional hedge funds and investment companies are custodians of your investment. So like you said, they have Colin Brightfield on their ledger as, owning this many shares, but technically they own them and they're custodial for you. So how does that play in when we're talking about like Coinbase? Because we often talk about going to Coinbase to start, but then it's not as good as having a MetaMask. And can you tell our listeners a little bit more about the difference between those two?
Yeah, so Coinbase is a centralized exchange, and MetaMask is a crypto wallet that is built on Web3 technology that uses private key public key technology to secure your funds. And so Coinbase is kind of just like your crypto version of Fidelity or Charles Schwab. It's like an investment bank that deals with crypto instead of stocks and securities. So they are custodial, just like if you bought a stock in any other traditional brokerage firm, they buy the stock and then they put your name next to it. And then if you sell it, they sell it on your behalf, right? And they take a little fee for doing that. And Coinbase is the same thing. So if you deposit some money into Coinbase, and it's cool that they do let you trade right away, right? So you can go straight from your bank account and you can buy once the funds hit your Coinbase, it doesn't take very long. It's a minute or two, and then you can buy some Bitcoin, some ETH, some whatever, and you're good to go. But Coinbase is actually holding on to that Bitcoin or that Ethereum for you in your name in just the same way that a normal brokerage firm would hold on to it for you. And then if you sell it, then Coinbase sells it on your behalf and gives you the funds. So you're never actually in control of those assets. And MetaMask is different because if you transfer your assets from Coinbase to MetaMask, you're actually taking custody and you own those tokens, you own those assets outright. And this is why you have to have like a seed phrase and to recover your password, and you have your password, and no one else has your seed phrase or can recover your password for you because it's not a custodial company, right? So like if you forget your password on Fidelity, you can, verify your identity. You can call them like, hey, I'm locked out of my account. They can get you back in. But if you lose your private keys with one of these crypto wallets, you're out of luck because that no one has your private keys. No one has your keys because they're not holding on to anything for you. So
And
MetaMask is just
this can sometimes be a little intimidating to folks who want to,
yeah.
take control of their money. Is, oh wait, I have to then have, you know, this saved somewhere securely and not share it with anyone else and never lose it.
Yeah, it definitely is. You're becoming your own bank essentially, and you're able to. But when you become your own bank, you can do all the cool banking things that banks only get to do. So yeah, you have to be
Normally,
responsible, but
normally you got to be a accredited bank, but now decentralized finance lets you have access to those investment opportunities that normally, as an everyday person, we wouldn't.
yes, exactly. Yeah. So usually for a lot of the things that you can do in DeFi, in the traditional world, you have to be accredited investor. You might even need to have a certain amount of money in your account before they let you do certain things. You might have to have 100,000 or $1 million before they even let you. And it's almost like they treat you like you're a child and like, oh, well, you're not capable of investing in these things. And it really is an ivory tower. It's a way to protect the industry, to build these moats around it. And
It's the whole argument of generational wealth making more generational wealth and not
yeah, because
actually allowing for
yeah,
the expansion of the middle class.
yeah. So what's amazing is MetaMask lets you take custody of your assets. You own them. They're in your wallet. You don't have to ask anyone else to spend them, to move them, to invest in, to do other, money verbs like lend them or take out a loan against them. It's all up to you. And yeah, you're right. There, you have to have a level of responsibility with your private keys, but there's very great strategies and there's tons of great resources out there on how to do that. And I know we're going to do more episodes about that as well.
Yeah. Yeah. We'll
But
do
it's
a
worth
deep.
it. It's worth the learning, and I think it comes down to also just financial education. It's like, because it's really not scary. It's just unknown for people, and then that makes it kind of scary. But if you just take some time and read up and do your due diligence, it's really not scary, and in fact, it's very empowering.
Yeah. And we'll do a full educational deep dive into every aspect of DeFi that we can really think of. But for our listeners today, let's just do a quick 1 or 2 minute. What does DeFi look like for the average user when they have their funds in MetaMask? How are people getting those, 5, 10, 12% returns just using like a typical DeFi process?
Yeah, so there's lots of ways you to do it, but the simplest way is, right, you can get your money from a centralized exchange. So you got to go from your bank to an on ramp that lets you go into the crypto world.
Like
So just like you would
Coinbase
get
or
like on an on ramp to get onto the freeway, right? You gotta go from fiat land to crypto land, and so you need a bridge and you need an on ramp. And Coinbase is one that is very popular. It's been around for a long time. There's also FTX, there's Crypto.com, there's Gemini, there's a whole bunch. And the main thing is you don't want to stay on the bridge, right? You go on the on ramp, but then you don't stay there. You go where you're going. So you go from Coinbase into your MetaMask or into another crypto wallet. Phantom is a good one if you're going to do Solana, and MetaMask is good if you're going to be on Ethereum or Polygon. And then once you're in MetaMask, you have your assets there. You can go to any of these Web3 protocols, any of these Web3, essentially they're like DeFi apps that live on the internet, and they live on Ethereum or another blockchain. And the way you access them is through your wallet. So you don't need to have like a password and an email to go onto these websites. The way that you'll see a little connect button, usually at the top of the screen, or it'll even prompt you, and you'll connect your MetaMask wallet. And essentially, you're giving permission for the web app, the DeFi web app, to connect with your wallet. You're not giving it permission to necessarily take your funds or anything like that. But of course, you do want to be careful about what sites you connect your wallet to. You want to make sure you're trusting the site, and then you can do all the functions on it. So it connects with your wallet, and it loads what you have in your wallet. So you might have some ETH or whatever, and then you can take that ETH and you can invest it on Aave, which is a great protocol that lets you access yields, and you can do liquidity pools, or you can go to Curve and you can do yield farming there, or you can go to Uniswap and you can do liquidity pools there. So there's just different ways to make yield by sharing or lending out your assets.
Okay, yeah. So dive in a little deeper for our listeners on that. You're essentially you're allowing access to your Ethereum or whatever you're using. Let's say Ethereum right now. You're allowing the Aave protocol to then put that into a liquidity pool so that other people can have access to borrow it and use it, and then you're gaining yield on that.
Exactly. So liquidity pool is what lets us trade assets, right? So if you have Bitcoin and you want some Ethereum, Well, there needs to be a market. It needs to literally be like a store of some Bitcoin and some Ethereum. So you can throw your Bitcoin in that big pool and then pull out an equal amount of value of Ethereum, or vice versa. So to make these markets happen, there needs to be an incentive for people to put their Bitcoin and ETH in there. So you create a liquidity pool. So I put some of my Bitcoin in there and I have some ETH. I put it in the liquidity pool, and then you come along and, hey, I want to trade some of my Bitcoin for ETH. So you throw your Bitcoin in the pool, take out some ETH, and because I had my ETH and Bitcoin in this pool, I get paid a little bit of a transaction fee for helping facilitate that exchange, right? I essentially get paid rent, but in this case, we call it yield, for helping you or anyone else, right, make those trades. And so that's a great way that you can make pretty decent yields, depends on your pairs in DeFi. And if you look back at last summer, which was known as DeFi summer, some of the yields were just astronomical. People were making like 1,500% yields or even higher. I mean, there was some crazy 4-figure yields out there. I think it's calmed down a bit, but you can still find some really, really amazing yields in DeFi land that you can't find anywhere else in the world and in traditional finance.
And again, you're actually using your full Ethereum to make money for you. You're not allowing some third party centralized banking institution to be making money on your actual wealth.
Yeah. So you're the one who gets to take your own assets and put them to work for you, and you get to keep the rewards and the returns. But your traditional finance, right? You might put your money in a traditional bank and they go and take that money and go do similar things, right? They do liquidity pools, they do yields farming and other derivatives and whatnot. And they keep all of that, not you, which is crazy because it's your money. You worked hard for it. Why can't you be the one that gets to gets the revenue from and the returns? And why is it so hard to do it otherwise, right? Like the banks, they really don't want you to do this because they're already feeling the pain. The amount of money that they're not capturing and not able to use for their strategies is dwindling, and people are leaving because crypto DeFi is just better. I know right now there's there's some onboarding, right, that you have to do, but it's just more pragmatic and a better solution. And as the user experience improves and people get more tech savvy or more comfortable with these concepts, and it's only going to grow.
Yeah, and I'd like to bring us back around to why does this even matter? Like, what's the point of going through a little bit more trouble and making this happen? Well, the first one's obvious. You're actually getting yields on your wealth. You're not giving it to some centralized wealthy institution. Helps build the middle class, right? It allows people to generate wealth that would normally be out of reach to them. My other thought that I really love goes back to me quitting my relationship with Bank of America. If our listeners will recall, the Dakota Access Pipeline was a big eye-opener for how our centralized banks are investing funds. And a lot of banks were investing in fossil fuel industries. And as a customer of the bank, I had no control over that. I'm like, they're using my money to invest in something that I don't believe in. So we're now taking power out of their hands and not allowing them to use our wealth to invest in things that we don't agree with.
Exactly. So, because where money goes, energy flows, right? I mean, you're voting with how you're spending your money. I mean, for better or worse, that's just kind of how the world works right now. And so, yeah, why it's your choice. Why are these other companies getting to control your wealth? What I think is hard to grasp is that we're just so used to the way it is, and we didn't really, it's hard to imagine an alternative before you come around to DeFi and you start understanding some of the stuff that's happening here. But yeah, we have an alternative. Before there wasn't really an alternative. It was like, well, you got to use the banks because that's all there is. But now we have another system, another way, and it's a better way, and it's a more empowering way. And also like your point, it's a redistribution of wealth. It's I mean, remittances are another great example of this, right? So people who live abroad that send money back home, usually they're paying about a 10% cut to in fees and whatever to Western Union or whatever these other companies that they might use. And with crypto, you can do that with Bitcoin. You can do it instantly and you can do it for no fees. So, or very low fees. So that's already just a 10% more wealth in the pocket of people who need it most. And then if you look at, this whole freedom argument of, it's really hard to separate economic freedom and political freedom. That if you start to impede upon people's economic freedom, you are also essentially impeding on their political freedom, and you're just eroding their rights. And so controlling the economy is a means to control the populace. And it's a way to keep everyone in line, right? So also, it's really important for freedom. If you care about freedom, then you really should care about DeFi, because DeFi is one of the only things that's protecting the small amount of freedom we still have left in this kind of very heavily surveilled kind of world we're living in. And you just look at COVID as a great example of how much governments can really lock you down. I mean, look at Japan, or in Australia, you can't even come in and come out. I mean, it's nuts. I've met someone just the other day. I'm traveling right now. I'm in Mexico, and I met an Australian fellow who literally had to create all these little reasons and excuses and jump through zillions of hoops to get out of the country. And it's just, you don't realize how bad it can get and how much top-down control and authority governments can just sweep in and take until it starts to happen, until you have something like COVID and you're like, oh, wow, they can really reach far, and they can reach deep into your rights and your freedom. And DeFi is one way to protect yourself and protect your sovereignty and protect the freedom of other people too, by helping them understand that how important it is to be in control of your own finances.
Yeah, I'm really excited for the progression of Senator Elizabeth Warren's DeFi knowledge, because with what she's done to regulate banking institutions, I would think she'd be, first in line of the fan club for DeFi, and especially with the openness of the blockchain and the being able to verify every transaction and that transparency. I don't see how that's not a love of hers. And maybe financial wealth. I know she is a very wealthy lady, so that could have something to do with it. Being an entrenched wealthy American, might swayed her judgment a little bit. But it like you said, it really has the power to separate political and economic choices, which at the end of the day, was the United States founded on the economics or the politics? And obviously you could argue that there's incentives for both, but I think everyone would say that the all men and women are created equal. We're not just white land owning men that are created equal now, as the Constitution maybe said back in the day, but we're really trying for the all inclusivity of everyone now, and the current banking institutions do not allow for that.
That was very well put. Yeah. This whole country was founded on these principles of freedom, like you said, and equality. But our financial system is anything but that. It does not reflect those values. And crypto and DeFi are creating an opportunity to change that. And it's really exciting to watch. It's really inspiring to see what people are building and the avenues of opportunity that are being created with all this new technology. And so we're not, I know, and I don't want people to think that we're just hating on banks. It's just there's sometimes a better solution comes along, right? And that's pretty much, kind of the bigger argument is just blockchain technology is just a great piece of technology. It's a great tool. Yeah. And you can use the tool obviously for bad or for good, but DeFi is a great way to use it for good, to create more economic choices for everyone and create more access for everyone. Because all you need is a smartphone and you can get an Ethereum address. And it doesn't care how old you are, where you live, the color of your skin, your sexual orientation, your religious beliefs. None of that matters. It doesn't ask any questions. It doesn't care. It's just a computer program, and it just gives you an address. And then you can take that Ethereum address and you can transact anywhere around the world with anyone else in the world. So
and I
that's
love that
just
you
better.
bring I love that you bring technology into it, because I was going to reference and point our listeners to the Bankless episode of the history of electronic markets. And in that episode, they talk about the technological increases that allow for the reduction in lawyers. Every step of a technological integration reduces the number of lawyers. So
We get rid of a
essentially,
layer of lawyer for each tech revolution gets
right.
deleted.
And we've already said we love our lawyers, but do we
Especially our
need
blockchain lawyers. They're great.
a whole institution of banking where people are sitting in cubicles pushing paperwork that is now obsolete? It's a waste of resources. It's a waste of time. I'm sorry to say it, people, but you could be doing different things with your time that might be more fulfilling than pushing through paperwork for Bank of America.
Exactly, Cash, because each layer of this blockchain technology disintermediates, this layer. We don't need to have so many contracts and laws and papers because it's all in computer code. We're replacing paper with code. And it really is logical, right? We live in a digital age where we do everything online. Like, we don't even think about it anymore, right? We're just, the internet is just pervades our lives. And we just saw what happened, again, to bring it back to the Facebook thing. Like, it pervades our lives so much that, like, literally, like, the world freaked out when it went down. So this is how pervasive we live our lives. So why not just have, a code, have everything in code that gets rid of all these convoluted contracts? And you go back to how inefficient it all is, right? It's super inefficient, and it costs a lot of money. It costs a lot of money to have big office spaces with a lot of employees doing compliance and et cetera, and doing contract law. That's very expensive. And when you replace all of that inefficiency with something like Uniswap, which is like the New York Stock Exchange, but for exchanging crypto tokens, all those savings and all that inefficiency goes to the user. And that's where, like, people are like, oh, where's all this money coming from? It's like, because you're getting rid of all the inefficiencies in the market, and then the users get the wealth that's would have been distributed and wasted on all these old school ways of doing things.
I love it. Yeah, it's when you break it down like that, it's really like, how can we not do this? For sustainability and for progress in the world, we should be doing things more efficiently. So it's just like a no-brainer, really, once you start dissecting it.
It really is. So that's it for now. We hope you enjoyed this episode.
Thanks for sharing the world of blockchain with us.
Crypto is changing the world. We're here to ensure you're ready.
Please subscribe, share this podcast with your friends and loved ones, and leave us a review.
We look forward to sharing our next episode with you.
Cheers.
Cheers.